China's Civil Aviation Authority has quietly asked airlines to update their fleet renewal plans for 2025 and beyond, specifically probing whether those plans include overdue orders for Boeing jets. The stated goal is to gauge need for commercial jets made by Boeing, according to an SCMP report. In practical terms, the Civil Aviation Administration of China CAAC wants to know how many Boeing planes Chinese carriers want and what discussions, if any, they have had with Boeing. This data gathering serves two purposes. First, it updates China's own outlook on fleet growth. Chinese air traffic is expected to grow roughly 5% per year in the long term, so airlines must modernize aging fleets. Second, it creates leverage in looming trade negotiations. By counting Boeing's overdue orders, Beijing signals to Washington that these unresolved plane purchases could be a bargaining chip. Indeed, SCMP notes that CAAC Director Song Jiang even met Boeing Senior VP Brendan Nelson in Beijing for a deep exchange on expanding cooperation. In short, the survey seems aimed at identifying where US-China aviation TIs could thaw if tariffs ease or where pressure points lie if they do not. The bigger context is the ongoing US-China tariff war. In April 2025, Beijing retaliated against US tariffs by ordering its airlines not to accept deliveries of Boeing planes. Top Chinese carriers Air China, China Eastern and China Southern had planned roughly 179 Boeing deliveries in 2025 minus 2745, 53, and 81 aircraft, respectively. Bloomberg reported that these jets were flown back to the US rather than delivered amid escalating duties. That move stunned aviation markets and underscored how trade disputes can drag the aerospace industry into geopolitical conflict. A Boeing 737 MAX 8 intended for a Chinese carrier returns to Boeing field in Seattle after China halted deliveries in April 2025. This image became a symbol of the US-China spat in civil aviation. Within weeks, however, both sides agreed to a 90-day tariff truce May-August 2025. China lifted its Boeing delivery ban in mid-May once a deal temporarily slashed many tariffs. US and Chinese officials have since held follow-up talks, for example in Stockholm, July 2025, to extend the pause. If a broader agreement is clinched, possibly coinciding with the Trump-Xi meeting, it could lead to a steady resumption of Boeing shipments. Indeed, Boeing reported in June 2025 that it delivered 60 jets in the month, up 27% year-on-year, including 8 airplanes to Chinese carriers, the first since the ban. In other words, normal deliveries have quietly restarted. Nevertheless, a final deal is far from assured. Recent press notes preliminary steps the tariff pause itself, negotiations on rare earth exports, etc., and caution that no enormous breakthrough is expected immediately. Any firm Boeing buying commitment from China would likely be part of a larger package. Notably, China's Phase 1 2019 trade deal, which promised huge purchases of US exports including aircraft, largely failed. By 2021, China had bought none of the extra $200 billion in goods it had pledged. Still, market watchers say Boeing is well placed to win early benefits if the truce holds. As SCMP notes, Boeing will be in the most forward position to benefit when a thaw arrives. In summary, an agreement could include resuming Boeing purchases and cutting tariffs, but it will require reciprocation, for example US tech rare earth concessions or increased import quotas. Analysts warn that despite public bravado, the final deals usually come from haggling behind closed doors and may offer only incremental steps rather than sweeping guarantees. One consultant quipped that Beijing might treat promised Boeing orders as leverage in broader trade talks. In other words, China could hint it will buy more Boeings if the US makes concessions on other issues. For now, the outcome is uncertain. Both sides have incentives. Boeing wants to regain market share. China needs to expand fleet capacity, but neither side can fully trust mere verbal promises. Boeing's recent history has been rocky, raising questions about Chinese confidence. In 2018 to 2019, 2 brand new Boeing 737 MAX 8 jets crashed Lion Air in Indonesia and Ethiopian Airlines in Africa, killing 346 people globally. China's CAAC led the world by grounding its entire 737 MAX fleet after the second crash, then suspended most new MAX orders and deliveries through 2019. Those incidents shattered trust in Boeing's safety oversight. More recently, on March 21, 2022, a China Eastern Boeing 737-800, an older model, crashed in Guangxi province with 132 aboard, underscoring that Boeing aircraft are still involved in fatal accidents. Investigations into MU-5735 are ongoing, but the event reminded everyone in China that Boeing jets crash too. Boeing's in-house safety record also hit the headlines. In January 2024, an Alaska Airlines 737 MAX 9 suffered an unexplained mid-air cabin panel blowout. This triggered a surge in Boeing employee safety reports. Reuters found a six-fold increase in internal safety concerns after that incident. US regulators have even capped Boeing's 737 output to ensure issues are addressed. All told, Boeing's reputation in China was bruised not only by international crashes but by visible quality control lapses. For example, Chinese analysts note that a 2024 spate of quality problems at Boeing hardened Chinese skepticism about MAX safety, so much so that no new MAX orders have been announced since then. These factors feed into Chinese purchasing decisions. Any new Boeing order will likely come with extra scrutiny. CAAC inspectors may demand to audit Boeing's factories and software, as some industry voices suggest, and Chinese engineers will want guarantees. China has its own jet manufacturer COMAC, and those jets still rely heavily on Western engines and avionics. In fact, analysts warn that if China were to stop buying US parts despite Boeing, it would severely hamper its domestic C919 jet program, halted or dead, according to Bank of America. In short, Boeing can't be written off, but Beijing knows its approval will depend on strict safety compliance. Key safety incidents: 2 fatal 737 MAX crashes. 2018-19 led China to ground the jet. A China Eastern 737-800 crash in 2022 killed 132. A 2024 mid-air panel blowout on a MAX 9 further rattled confidence. These high-profile problems have made regulators and the public wary. In global aviation, Boeing and Airbus are locked in a duopoly, and today Airbus is winning the moment. In fact, industry reports say 2019 was a turning point in China. That year, Airbus deliveries to Chinese carriers first outnumbered Boeing's. By mid-2025, rumors swirled that China might place a huge Airbus order 20050 jets during a European leader's visit. If real, such a deal would further widen Airbus's lead. One analysis notes that under a scenario with 300 A320s and 100 A330 or 350s added, Airbus would dominate China's future fleet. Boeing's strengths: Boeing has some world-class products and advantages. Its 777 and 787 wide-bodies have long range, high capacity and good fuel efficiency. For example, Emirates, a major airline customer, loves its 777X. Its 737 MAX family competes head-to-head with Airbus's A320neo family. Many airlines in China and elsewhere already train crews on Boeing cockpits, so commonality matters. Boeing also benefits from strong US government support and a massive US airline market. Notably, Boeing can pivot undelivered jets. Analysts point out that a pause in Chinese deliveries would not have a major impact on Boeing, since it can redirect planes to other airlines. And Boeing has decades of service and maintenance presence in China. For example, airlines already operate large fleets of 737 Secons, 777 Secons, 787s, which creates switching costs. Airbus's strengths: Airbus has momentum, especially now. It has more new orders worldwide. Airbus won 950 orders in 2015-2024 versus Boeing's 512, and it has recently out-delivered. For example, in June 2025, Airbus delivered 63 jets to Boeing's 60. Airbus's A320-A321neo single-aisle jets are in very high demand globally. They hold record backlog numbers, and Airbus has also aggressively sold wide-bodies like the A350 and A330neo into Asia. The company enjoys backing from European governments too. In China specifically, Airbus has cultivated ties with state-owned airlines during Boeing's hiatus, which is why rumor mills suggest Airbus may fill a void if Boeing stalls. Boeing's key weakness right now is perception and delivery issues. Its production has been hobbled by quality woes, labor strikes, and the aforementioned regulatory limits. Its once dominant backlog shrank. By early 2023, Boeing's firm backlog was 555 planes, whereas Airbus, with deliveries on the rise, is targeting well over 700 deliveries per year now. Airbus, by contrast, has fewer safety scandals and ramping output, though it too has occasional glitches, for example, production slowdowns on certain models. Another Boeing weakness is reliance on the US market. It earns a lot of revenue in dollars, which can make it vulnerable if China or Europe sour. In summary, Boeing can point to proven long-haul products and a strong US base, but Airbus currently leads in Chinese orders and delivery pace. In China's decision-making calculus, this duopoly means Beijing can play one off against the other to extract better deals. Indeed, some analysts suggest China will use Boeing as a bargaining chip with the US, while leaning on Airbus deals to solidify ties with Europe. Ultimately, Chinese airlines need both and will balance. For example, Sirium notes, Chinese carriers still have Boeing 737 seconds and 787 seconds in service, so an all-Airbus fleet isn't realistic anytime soon. If a deal comes, what does China gain? Should Washington and Beijing finalize an aviation-related agreement, what are China's wins? First, Chinese airlines would finally be able to take the jets they need to meet surging demand. Carriers like China Eastern and Air China have thousands of flights to fill. Daily stalling deliveries cost them capacity and profit. Lifting tariffs would make Boeing planes cheaper for airlines. No 1251 for 5 surtax, enabling fleets to modernize more quickly. One May 2025 report notes some Chinese carriers were deferring delivery rather than pay duties, so a deal would let them stop sweating extra FEs. Restoring planned deliveries also injects foreign investment. For instance, the long-delayed Boeing orders represent over $10 billion in aircraft value. Those dollars spent support US jobs and innovation, but Chinese companies win too, by acquiring fuel-efficient planes and training or MRO arrangements that improve their operations. Second, a deal on Boeing is likely part of a broader rollback of trade barriers. Recall that reciprocal tariffs in April 2025 would have hiked Boeing jets' cost by up to 125%. Rolling these back means cheaper US technology and goods for China. This could range from industrial machinery to electronics. In aviation specifically, China already exempted US-made engines and landing gear from tariffs even before the May truce, a tacit admission that China needs those supplies. An agreement might extend such exemptions, ensuring smooth production of both foreign and domestic jets. Moreover, the resumption of trade might lead to China pressing the US to ease tech export controls on semiconductors or telecom equipment as part of package deals, outcomes that would clearly benefit China's broader economy. Third, there is intangible geopolitical payoff. Buying Boeing planes can be spun as cooperation, possibly softening Washington's push on other issues. For example, if China agrees to increase Boeing purchases, it might gain concessions on other fronts, lowered US export controls, or continued access to American markets without new tariffs. It also hedges China's strategy. Commentators note China might leverage both Boeing and Airbus orders in diplomacy. By promising Boeing orders to the US and Airbus orders to the EU, China maximizes its diplomatic currency. One online observer cynically summarized this by saying China would use Boeing to negotiate with Europe and Airbus to negotiate with the US. In practice, this means China can tout its commitment to free trade, buying foreign planes again while still nurturing its own aviation champions. Finally, unlocking Boeing sales helps protect China's own aerospace ambitions. The Comac C919 narrow-body jet is China's domestic rival to the 737-320, but it cannot fly without Western engines and avionics. As Reuters notes, halting US parts would likely halt or kill the C919 program. Thus, a truce that normalizes aviation supply chains, including those that feed Comac, ultimately serves China's long-term strategy to get world-class aircraft. In short, removing the Boeing ban not only keeps US jets in the market, it also keeps the upstream parts flowing into China's own manufacturers. Key economic facts: China's import-export of goods with the US totaled $650+ billion in 2024. Aircraft trade is a small slice of that, but strategically weighted. Boeing's backlog once planned 50 deliveries to China in 2025, 10 of Boeing's global backlog, and Beijing's move to suspend aircraft purchases was intended to make a difference in the trade balance by targeting Boeing. Resolving the Boeing issue would therefore relieve billions in commerce and signal goodwill in an economy hungry for stability. Several broader factors color this issue beyond the raw numbers. Strategic leverage. China has repeatedly shown it will time large plane orders around diplomatic events. Any Boeing commitment may thus be as much about negotiating clout as about fleet needs. Observers point out that China's CV is unmatched. It plays better bluff poker than Trump, as one wag put it, meaning it can tease orders without delivering until terms suit it. No guaranteed quota. Unlike Trump's unique 2018 demands, which tied tariffs relief to fixed import volumes, now abandoned, modern trade deals do not typically mandate how many planes to buy. This means Chinese airlines remain legally free to delay or cancel Boeing orders if they find better deals with Airbus or COMAC, even if a truce removes all tariffs. Critics note the absurdity. Why set tariffs to zero if buyers still prefer local products? It's a gamble. Public hype vs reality. The social media frenzy around Boeing or China decisions can be wildly off mark. Some Chinese netizens sarcastically ask, if China's economy is collapsing, why buy hundreds of jets? Mocking doom mongers. In the US, pundits celebrate any hint of a victory. Trump wins again, often without evidence. Investors sometimes even tweet about buying Boeing stock on rumor alone. In reality, the final result will hinge on negotiated contracts, not #boasts. Industry impact. For Boeing itself, losing 2% of its backlog if China shifted orders is manageable short term. It can sell those slots to other airlines. Conversely, Airbus could not instantly absorb all of China's demand. A sudden shift would strain its production. Hence, both companies have stakes in the outcome. Moreover, if this matter is resolved positively, Boeing could recover some lost market share, as early indications of resumed Chinese deliveries suggest. If not, Airbus and COMAC are likely to fill the void. Long-term trends. Even as politics swirl, fundamental trends matter. Asia's air travel market is booming, and Chinese carriers will need thousands of new jets in the next decades. Whether those are Boeing's, Airbus's, or C919s depends on economics and quality. A stable trade environment with low tariffs and good relations generally helps all suppliers by expanding the total market. In conclusion, China's aviation survey is a tactical move in a larger geopolitical game. Economically, it's about matching aircraft demand to opportunity. Politically, it's about leverage and face. Boeing's past safety failures and the trade spat have shaken confidence, but the aircraft still fill a crucial need. Airbus currently leads in China, but Beijing clearly wants the option of Boeing on the table. If a deal is struck, China would gain cheaper fleet expansion and stronger negotiating position for other trade issues. For now, watchful eyes are on both sides. Are Chinese airlines genuinely planning to ink new Boeing orders, or is this just politics? Either way, the outcome will have ramifications beyond aviation, a small symbol of how the two superpowers manage their heated but inextricably linked economic TIs. What's your takes? Leave the comments below and subscribe the channel for more deep analysis.